Hey, what's up? Welcome back to my channel, Trading with Ed. It's me again, Ed Jackson. Now, what I want to do in this video, I kind of want to officially introduce myself to the YouTube space. And like I said, my name is Ed Jackson. I'm from Kansas City, Kansas, and I have a wonderful wife, and I'm a father of 6. And I've been trading I started trading right before the pandemic hit, so probably mid 2019. And that's, I got introduced to trading through my brother. I think he was the first one that probably mentioned IML or something like that. But and then I think I got on first through Apiary Fund. That was the name of it, Apiary Fund. And they were I don't know if they're still around. They were doing a bunch of advertising from YouTube and I think Facebook. And I think I just kept seeing, and I was like, I've always been interested in learning how to trade. So let me try them. So they were kind of like a educational platform where you could possibly get funded through them. I think they had like a small funding account you could get. You paid a monthly, I think it was like $100 a month. And that's for the training. And it was I thought it was pretty cool because they would give you actually tests. So to make sure whatever videos or modules you read, so there was like, you had like you start out as a copper to bronze to silver then gold. And I guess once you get through all the tests, through the curriculum to where you're a gold status, I think that's where they would fund you. I never made it to gold. I made it to maybe silver or something. I mean, it's irrelevant. That's just where I started. So I got my feet wet through Apiary Fund, and I think I felt like I learned enough to kind of go somewhere else. So then I went to IML, and I probably only stayed in that maybe 2 months. I was just diving through the education that they did offer. So as far as retail education, and after IML, I think it was another company I joined for a month. I think it was called Tradera or something. It was like another MLM where they're trying to teach you enough to where you would want to recruit other people. So I don't know. Like I said, to me it was just kind of, they wasn't really trying to train people. Like everybody's want to create a some sort of MLM back then. But anyways, so I think it was through one of those. I think it was through IML, whatever. I had got my first Hugo's Way account, and I was just trying to figure it out. I started with EU. That's where that was like my starter pair as far as Forex, and then I just kind of played around with it, and I went to US 30 and I played around with it. And I think what happened with US 30 is, and considering the timing, I first started trading US 30 at the end of our last real bull cycle, and so pretty much all I had to do was focus on buys. I was still new. I was like, oh yeah, I'm winning. So it's easy to win when you're in a bull cycle. It's just buys. And that kind of messed me up because I was still new. But I was just like, it switched me to US 30. I was like, oh no, US 30 is a runner. So this was, like I said, right before maybe I think Q3 of 2021 is where I remember I started getting a little, had to keep trying to change my strategy and redefine my strategy. Back then I think I was only, my stop loss was typically about 50 points, and so I was pretty much day trading. So right now I'm a swing trader. It's funny how your experience will shape your trading journey. You start one way, and then you start to realize, oh, maybe if I change this up, it'll help a little bit better with my psychology. Or if I change this setup, maybe to help better with my risk management. So it's kind of like a forever unfolding education. And I think that aspect of it is what really got me obsessed with trading, because I've always been like a knowledge person. Like I go down a rabbit hole on any subject. So once I found trading, it was a constant challenge, and some people may beg to differ. They was like, oh no, it's an addiction. But I like to say, if you want to get good at anything, you have to be obsessed with it at some point. Just like working out, or you want to, let's say you got a goal in mind, I want to lose 10 pounds, or I want to lose 20 pounds. At some point through that thought process, you have to become obsessed with working out, obsessed with diet. I don't want to say dieting, but meal planning. So you'd have to be obsessed with counting your macros and carbs and all that stuff in order to really achieve your goal. And so, yes, I can admit I'm obsessed with trading. It's just, you just have to be in order to stay with it. It helps for me. It has kind of became a spiritual journey, because now it's like it's planting seeds of desire in my heart, and it's like it's up to me to have faith in those seeds that God has planted in me to follow through with the process, because it's like you have to fall in love with the process, because it's an ever unfolding journey of self-mastery. It's like it teaches you, it's funny, trading teaches you more about you than you previously realized. It starts to uncover a lot of deep-seated money concepts that you may not have known, you may not have been aware of. Your thinking around it, it's just it exposes those issues to where you like, oh, I didn't know I had an issue with money. I didn't know money makes me nervous. Well, I didn't know money makes me become more self-sabotaging. I didn't know, so it's kind of like it starts to unfold and reveal those aspects about yourself that you were unaware of previously. And to me, that is just it's just interesting that I'm learning more about me by becoming better at something, if that makes sense. So but like I said, you have to become obsessed with the journey. And like I said, I feel like I just went off on a tangent here, so I'm trying to gain my train of thought where I was going. But anyway, this, I'm not gonna edit this. I'm just trying to be as authentic as I can. But like I said, as I started learning this, and like I said, no, let me go back. We're in the bull run. right before interest rate hikes of March 2022. I think running that last Santa Claus route. It was easy to trade easier to trade US 30 because it was, buy. So now we started experiencing a pullback or sideways market, however you want to call it. You have to learn to adapt with the situations. It's just kind of one of those things. So I started day trading, nice swing trade, and I base all of my trades off of where liquidity is resting. And what I mean by liquidity, I'll go into it a little bit better on future videos, but I'm gonna just try to keep it real simple. Liquidity is basically where orders are resting, where people have not been stopped out or liquidated. So the psychology behind it is that those people are still pretty confident about their trade, of course, because they haven't been stopped out. So a lot of times, based on retail trading concepts that they teach us, you might see a Head and Shoulders, or I like to call them Lucky Charms. You got Cup and Handle, Head and Shoulders, Shooting Rainbows, Lucky Four-Leaf Clovers. You got the diamonds and the triangles. Anyway, let's say you see a Batman. I heard somebody call it a Batman, a double top pattern. So anyways, you got all these retail concepts that they train people that are just now getting into trading, of course, like Baby Pips or even IML. Hey, trade. Some people only trade say Head and Shoulders or double tops or M's and W's. I've noticed there's a certain timing where those patterns will get stopped out. So let me give you a quick explanation. You know what? I'm gonna show it on the chart here shortly. But you know what? Let's go over here. I'm gonna try to figure out how to edit all this later. But let's say you have. Let me figure out where is my. Here we go. I need my paintbrush. Yeah. Can't use it, man. Now I'm on my weekly chart, but I'm gonna zoom down. We'll get into that later. Let's say you have a pattern that does one of these. Boom, 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 boom. Then comes back and shoots up, right? All right, depending on what time. Let me see, I want to change this color, but I don't want to mess it up. Depending on what time it is, let's just say we got this high and this low, and it's Asian session. So this would be the start of Asian session, and this is where let's say this is not just Asian session, but this is Asian and London session. So we got Asian session and here's London session. So we're just going to call this our I refer to it as Asian London box, or Asian London order block. It's just the session, Asian London session. So this is all happening in Asian London session. Then New York session starts here and it shoots off. So what I've noticed, let's say we got this high and this low. This is liquidity, because some of these orders here have been stopped out and or buy limit or pending buy stops, whatever you want to call it. I forget the proper terms, but let's just say pending buy orders are triggered here. And the way liquidity needs to be accessed is by stopping everybody out so the market can go. And the way I have had to learn to understand is that liquidity is like the gasoline for the car. So it's how much pain can the market inflict on all these orders to achieve what the market wants to do based off higher time frames. So yeah, it may sound complicated, but that's what I've learned to kind of look at. It's like once you see it, you can't unsee it. So once it goes and liquidate these orders, once it goes up, it has to go to the opposite side. So if it liquidates the orders up high first, that means I'll be targeting this lower liquidity. And based off other liquidity zones, more mature liquidity zones that had not been liquidated, those would be my targets. Because my theory behind it is market makers are hedging positions on both sides. So whatever levels that the market maker had created during the Asian London session, they have to come back at some point and allow New York session, where most retail traders are trading. It needs to, in essence, it needs to create the situation where when they're going to come back and because the market maker has open orders going both ways, they're hedging, they need to come back to those levels so they can become risk-free or in profit, because at those levels they will be liquidating retail trading stops and buy stops, or sell stops. They're triggering all of the retail volume to, in a sense, hold the bag for them. So that's pretty much how I trade. That's just how I see the market. So, and like I said, there's like a million different ways to trade. So just because I'm just a random dude on YouTube, don't think that I'm trying to say my way is better. I'm just trying to contribute to the space to where everybody can compare notes. So my experience is my experience. So because there's so many, put it like this, when I went down my YouTube rabbit hole with different traders, like everybody else, we see everybody's strategies that they're sharing, and we take a little bit of this, a little bit of that from different YouTubers that we see. So I just want to share my notes as far as in US 30, because that's just, it might be somebody out there that just like, that's what they like is US 30, but they're trying to get a little, get a second opinion or a different perspective on trading US 30. So I'm just trying to give my notes. So it's just like we're all in class together on this self-taught trading thing, because a lot of us are, self-taught. We're YouTube University. So I just feel like I'm just another guy, another student in the class, and I just want to share my notes so I can help somebody else. And like I said, and of course, this is YouTube, so the goal is to gain an audience, but not just for me. I want to be able to contribute, but I want to gain an audience because I want to see where this YouTube thing can actually take me personally. Because for years I've always said I wanted to do YouTube. Even with my kids, I thought about doing the YouTube Kids channel. Me and my wife, we've done YouTube videos or channels, and I'm just like, what can I do that I feel like it's more of a niche down, and I can do it easier. I can do it more consistently, to where it's not like, oh, so uncomfortable. I don't want to do it. I don't want to do any prank videos. I don't, it's because it's so far removed from how you are naturally. And I'm a natural talker. I'm a people person. I've done sales. I've sold insurance. I've sold mortgages. I've sold cars. So, and I feel like, what can I do where I can talk, and like they say, whatever you teach. No, they say you cannot fully understand something unless you can teach it. So this is what YouTube is providing me, an avenue to where I feel like I can kind of teach what I know, so I know what I teach, if that makes sense. So anyways, yeah, so that's pretty much my journey. I'm trying to think, did I miss anything? Yeah, so this is pretty much my trading journey. I started it out day trading US 30 up until the last bull run, right before interest rates started being announced, and then I was getting stopped out, and it made me have to, every loss, it had to teach me that you never really lose. Yes, you're paying tuition to the market, or however you want to look at it, but you have to look at it as that you're learning. Nothing is ever lost. You don't allow a loss go without a lesson. So over the years of losing money, of course, it made me have to dive in and reevaluate, of course, my strategy, but also my psychology. And like most YouTubers would say, psychology is damn near everything. Is you can have a golden strategy, but if your faith in yourself and your strategy is not there, it will mess your psychology up. You would close trades prematurely. You would, get in too early. You would do a lot of things. Just like for me, I was funded with $320,000 with my Forex funds, and like I said before, before I even got to that point, I was always stopping out my trades too early. I was kind of, I would know exactly where I would need to get in, but even when I was funded with the 320, it'd be a lot of times where you get so emotional that you would get in too soon. Let's say if you got a bill due or something, you would your psychology would get to you. But when I was funded with them, and like I said, now it's a whole nother story in itself, just because let's just go and go down that road. When my Forex funds were down, that put a bad taste in my mouth for prop firms. And I just be honest, like I said, yeah, I never had issues with FTMO. I was funded with them for a little bit, and of course, you go down your trading journey, you lose accounts. So that was a couple years ago when I was funded with FTMO. Like I said, then I was funded with my Forex funds, and my thing is this: the time and energy, mental stress of putting into the prop firm account with my Forex funds. And when I reevaluated everything, I'm like, I could have put that same amount of money in my Henko trade account. Didn't have to worry about none of these dumb rules. I can withdraw my money whenever I want to. And I can trade however I want to. And the more I thought about that, I was like, I could have created my own funded account. I could have funded myself. So what I mean is this. Let's say, because we know, let's say $100,000 account with any prop firm. Where is the, first of all, where's the actual money? It's with them. So we don't even know if it's real money. Two, let's say $100,000 account, your stop loss, your max loss on most places is 10%. And that's what, 10 grand? So really it's a $10,000 account. So just however they do the numbers as part of their business model, because they know people are greedy. They know people, oh yeah, I wanna be a $1 million funded trader, you know, a 7-figure funded trader. When if you have $1 million in funding, the max loss you can lose is 100,000. That's not, no. If let's just say what it is, it's 10% of the actual amount. So anyway, so let's say you have a $100,000 funded account, and your max drawdown is 10%, which is 10,000. So you could leverage, let's say with Henkel Trade, you could easily take your time and leverage $1,000 or even lower. I'm just saying, let's say you start with $100 like I did, and you can just swing trade US 30 on Henkel Trade. Start out with let's say $100, you start out with a 0.01 lot, a penny lot, however you want to call it, and you just don't use it. I mean, I don't want to say don't use a stop loss, but yeah, you'll because the way I swing trade, my stops are about 1,000 points away. So no, I don't use stop losses. I just set alerts. So and I hedge, and usually I'm not going to start hedging when my entries are already 1,000 1,000 points in drawdown. So I usually start hedging if around 500 or 600 points in drawdown, and that's just if I know, hedging is just a tool I use to, if certain liquidity zones have been taken out and not rejected from. So it's like, okay, and if it comes back to it, I may hedge and give it some time, because if a lot of times is if certain trend lines have been broken and other trend lines have been established, multi-day trend lines. So I'm looking at that to understand if my mind just went blank. Anyways, I'm gonna edit this, but I'm looking at trend lines to understand which way the market is still trying to go. So I usually like to get in a trend line break and retest at liquidity. So, but like I said, sometimes you're wrong. You can be wrong. It's part of trading. So, anyways, not to keep rambling here. I want to get into some charts. You know what? No, what I'm going to do is this. I'm going to end this video here, and I am going to see you guys on the next video, where I am going to get into a little bit of charts and just a little bit of my analysis that's coming up for the following week. So I just see you guys on the next video. Peace.